You know, with all the nonstop market news, crypto hype, and trading apps buzzing in our pockets, it is so easy to get lost. So today, we're going to strip it all back to the bedrock. We're going back to the one book that Warren Buffett himself called by far the best book on investing ever written. We're diving into Benjamin Graham's masterpiece to pull out the timeless ideas that can, and I mean this, completely change how you see the market.
Right out of the gate, Graham hits us with the most fundamental question there is. It's a question you've really got to ask yourself before you ever put a single dollar to work. And there it is. Are you an investor or are you a speculator? And listen, the answer has nothing to do with how much money you have. It's all about the mindset you bring to the game. So what's the difference? Well, it's actually pretty simple, but honestly, it changes everything. An investor, that's what you see on the left, they're buying a piece of a business. A speculator, on the right, is basically just betting on a price ticker. An investor wants to know what a company is actually worth, right? Its real long-term ability to make money. The speculator, on the other hand, they're just trying to guess what somebody else is going to pay for that same stock tomorrow or next week. And Graham's entire philosophy, it's built for the investor.
Okay, so how do you actually become an investor? Well, it all starts with the very first of Graham's 3 great pillars, and it's a total shift in perspective.
This right here might seem super obvious, but stick with me because it is a huge deal. When you buy a share of stock, you are not just buying a blip on a screen. You are becoming a part owner of a real company. You know, a company with buildings and employees and products and actual profits. Think about it. Would you buy the coffee shop down the street from you without knowing if it was making any money? No way. So why on earth would you treat a stock any differently? And that mindset, thinking like a business owner, it leads you straight to the strategy that Graham basically invented, value investing. See, this isn't about trying to perfectly time the market. It's about figuring out what a business is truly worth and then having the patience to buy it for a bargain price. And that little idea of a bargain, well, that brings us to the next critical pillar. And that brings us to pillar number 2, which Graham called the, quote, central concept of investment. It's all about building your margin of safety. This is your ultimate defense, your cushion against the wild uncertainties of the future. Let me put it this way. Imagine you're an engineer building a bridge, and that bridge needs to hold 10,000 pounds. You wouldn't design it to hold exactly 10,000 pounds, right? Of course not. You'd build it to hold 15,000, maybe even 20,000 pounds. That extra capacity, that is your margin of safety. In investing, it's exactly the same. It's the gap between what a company is really worth and the price you actually pay for it. And you know, the real beauty of this concept is the freedom it gives you. You don't have to be a fortune teller. You don't have to perfectly predict next quarter's earnings report or what the Fed is going to do next year. If you buy with a big enough margin of safety, a whole lot of things can go wrong and you can still come out okay. So really, it all just boils down to a super simple 2-step process. First, you do the homework. You figure out what a business is conservatively worth. Second, you wait, and I mean you wait, for the opportunity to buy it at a huge discount to that value. That's it. That is the secret sauce. But look, knowing what you should do is one thing. Actually having the emotional discipline, the guts, to do it when things get crazy, that is a whole other ballgame. And that brings us to Graham's final, and maybe his most famous, pillar.
So Graham wants you to imagine something. Picture this. You're in business with a partner. His name is Mr. Market, and he's a little bit unstable.
On his good days, oh man, he is just over the moon. Totally euphoric, right? He sees nothing but sunny skies ahead, and he'll offer to buy your shares from you for way, way more than they're actually worth. But then there are the bad days. On those days, he is an absolute wreck, totally convinced the world is ending. And in a total panic, he'll offer to sell you his shares for pennies on the dollar. I mean, we're talking absurd fire sale prices. So here's the deal. The fool gets completely swept up in Mr. Market's mood swings. They panic when he panics, they get greedy when he gets greedy. But the intelligent investor, they realize Mr. Market is there to serve you, not to guide you. You can just ignore him. Or even better, you can take advantage of him. You buy from him when he's pessimistic and terrified, and maybe you sell to him when he's giddy and euphoric. So let's bring this all home. When you combine these 3 pillars, thinking like an owner, demanding a margin of safety, and mastering your own emotions, what you get is the investor's ultimate edge. This is your complete intelligent investor toolkit. Number 1, own businesses, don't just rent stocks. 2, always, always demand that buffer against being wrong. 3, use the market's crazy moods as your opportunity, not your instruction manual. And finally, number 4, and this might be the most important one, realize that the biggest risk to your money isn't the market, it's probably your own impulsive reactions to it.
You know, in today's world of algorithms and instant information, you'd think this advice from over 70 years ago might be a little outdated. But it's the exact opposite. These principles are more essential than ever. They're the anchor that keeps you grounded, a philosophy that basically immunizes you from all the daily noise and focuses you on what actually matters for building long-term wealth. So the final question this book leaves us with is this. Every single day, Mr. Market knocks on your door offering you a deal. Armed with this wisdom, you now have a choice. Are you going to be a victim of his moods, or are you going to be the master of your own financial future by using his folly to your advantage? The choice is yours.